Welcome to the Unprofessional Accounting News. I hope you all enjoy the nice weather today, and unfortunately, you have to listen to my voice for the rest of 15 minutes. But I promise it will not be as boring as you think. Oh well, if it's boring, I can do nothing anyway. So, back to our topic. Today we're going to talk about Arthur Anderson, which used to be one of the big five accounting firms that generate billions of revenue for its services every year. But after the Enron case, one of the biggest scandals in accounting history, Anderson had been caught in hiding the truth of Enron's financial statement. The giant accounting firm finally surrendered its CPA license and lost all their reputation. What's the lesson we learned from Anderson case? What steps the authorities take to prevent this kind of scandals again? Before we get into our discussion today, let's review some of the detail of the case back in 2002. Arthur Anderson had been served as Enron's sole auditor for 16 years. Shortly after Enron's case, the SEC questioned Anderson's CEO Joseph Berdino about his firm's inaccurate audit statement that Enron did not include its partnership in the financial statements. On June 15, 2002, Arthur Anderson was convicted of obstruction of justice for shredding records, auditing trails, and the documentation of Enron. Nancy Temple from Anderson Legal Department and David Duncan, the lead partner for the Enron account, were cited as the responsible managers in this scandal, as they had given the order to destroy relevant documents. Although the conviction was reversed later, the impact of the scandal ultimately destroyed the firm. Arthur Anderson agreed to surrender its CPA license and its right to practice on August 31, 2002. It became the largest accounting firm ever to fail and draw out the biggest accounting scandal in the history. According to generally accepted auditing standards, auditors have to remain independent in both fact and appearance. However, Anderson was actively involved in Enron's business in both auditing and consulting. Enron had paid Anderson $25 million for its audit and $27 million for consulting and other services in 2000. This amount was enough to make Anderson's second largest account. As we can see, this huge amount of revenue was enough to turn Anderson into an advocate of Enron. That's the same reason in Anderson's other cases such as WorldCom. This conflict interest have always played roles in accounting frauds. Almost every auditor will face this challenge. That's why more detailed rules and strict standards are needed in the accounting industry. After the Enron and Anderson case, many changes have been made in accounting standards to prevent this kind of scandal. The AICPA made several new statements on auditing standards in response to the Enron event. SAS 96 contains a list of factors that auditors should consider when attempting to determine the nature and extent of documentation for a particular audit area and the procedure. It also requires auditors to document all decisions or judgments that are of a significant degree. For example, a decision of a significant degree would be an auditor's approving a client not using GAAP for a portion of their financial statements. SAS 99 outlines what fraud is, reaffirms the auditor's responsibility to look for fraud, and reaffirms the necessity to gather all information for an audit. The government also reacted aggressively when they became aware of Enron scandal. The Sarbanes-Oxley Act requires companies to re-evaluate its internal audit procedure and make sure that everything is running up to or exceeding the expectations of the auditors. It also requires higher-level employees, such as CEO and CFO, not only have understanding of a fairly presented financial statements and effective internal control, but also be responsible for any deficiency in the financial statements and in internal controls. Sarbanes-Oxley also brought with new requirements for disclosures. These requirements include reporting of transactions called reportable transactions. Accompanying this requirement are strict penalties if these transactions are not reported and discovered later. This act will mean significant additional work for accountants over the next several years. Another big change that came from the Anderson case was a new push to separate auditing services from consulting services. As we discussed previously, the major concern in the case is Anderson's independence. If we can separate auditing service from consulting services, it will tremendously reduce the chance and the opportunity for the auditors to get involved in accounting fraud. Generally says, the goal of these changes is to ensure the quality of audit and to prevent accounting frauds by tougher restrictions. It definitely requires more work from accountants, but will in the long run improve many factors within the industry. They will help to restore some of the public's confidence in auditors and the business by making the auditor work harder to demonstrate more fully that no material misrepresentations exist, and requiring the company to take a more proactive role in their audits and accounting. The separation of auditing and the consulting will move the accounting industry forward a great distance toward increased credibility. It will decrease the occurrence of non-independence by auditors. At the same time, this will allow companies to reap the benefit of having both auditors and the consultants. Again, we are not able to say the industry will be perfect after these regulations, but serious punishment will make the auditors reconsider the cost of conducting unethical behaviors. What we expect is that the future regulation will still focus on detail-oriented auditing standards and the punishment on fraudulent activity. But as auditors, we need to understand the importance of being independent and providing high-quality services. That's all we learned from today's topic. Please go to our website and the Facebook page to leave your comment and tell us what future regulations you think will help us become self-governed profession. Thank you for watching. See you next time.